Let's start off with that 500 billion naira injection into projects in Nigeria. Your view on this, and clearly the markets enjoyed this news. A gain of 238 basis points is what we saw coming through on the NSE on Friday.
Yeah, definitely it's a positive news for the market and for the Nigerian economy at large. Obviously having sort of huge fund, 500 billion coming to the manufacturing sector to obviously refinance existing loans at a lower rate, and obviously giving new loans to manufacturers is definitely positive for the manufacturing sector in Nigeria. And also because the CBN is also working with other agents of the economy to also boost the power sector, also just mean we have too much positive news in the market, and that's why the market has no choice as opposed to just reacting positively to such information on Friday.
Of course, the governor was talking about the fact that there's been historically a big focus on the financial sector. Now it seems to just turn and look into other very important sectors of the economy, that we've got to start seeing job creation in those sectors as well. And from a exchange perspective, an equity perspective, we keep talking about sector rotation. Do you think that we could see quite a lot of money being taken off the table from the financial front and perhaps being put into the construction side of things?
Well, I agree with the fact that you can't have any sustainable growth anywhere in the financial market if the economy is not recovering. I think investors in the past have focused too narrowly on the stock market without putting an eye on what's going on in the economy and in the business environment. These are two distinct things that obviously are very, very related. So definitely with this sort of reform, with this sort of improvement in the real sector, I see that sort of sector rotation, a sort of shift of focus for those manufacturing sectors, for the construction sectors, sector as I said, and obviously taking too much attention away from the banking sector, which has over the years been a significant proportion of the Nigerian market capitalization.
Babatunde, we had CCNN closing limit up on Friday. Do you think that these are one of the companies that will definitely be seeing quite a few gains coming through going forward? A lot of other companies that we saw under the spotlight over the last couple of weeks, WAPCO as well, and also just keeping in mind that Ashaka Cement has also been one of those favorites.
Basically, the cement sector really, it's one of the favorite for market operators right now. And the reason for that is not far, but the fundamentals in that industry is so attractive. With the demand significantly outweighing supply, then obviously gives room for manufacturers to increase price, to obviously sell as much as they can. They're cash cows, and obviously this is what investors are looking out for. So we've seen significant gains in WAPCO, in Ashaka, in the past few weeks, and I would say those are justified really. WAPCO is planning to add about 2.2 million metric tons to its existing 2 million metric tons capacity. That's huge, and obviously in a market that still needs to be served with a lot of cement, you obviously just know that that's one of the places you have to be. So it moves significantly, and I think that's justified really. For Ashaka, really, it's another good story. It's planning to increase its cement production, at the same time also working on its operating cost efficiency through its coal project, which is expected to bring down its cost of production by about 50 to 70%. That is a huge cost savings, really, and investors are keeping an eye on that, and obviously that's fueling to such gains you had in that sector. So I think those gains you've had in that sector are largely justified, and it's based on the whole the fundamentals in that sector.
So far this year, in currency terms, we've seen the bourse gaining almost 35%. Some say that investors are going to become quite cautious about these gains. Do you think that we could be seeing some money coming off the table going forward from here? And I remember this time last year, the banking sector was plummeting. There was absolutely no end in sight in terms of what we've been seeing coming through on the equity front. So things looking much better in 2010. But the question is, are these gains sustainable?
Yeah, I understand people's concern and investors' concern really about the swiftness of the gains we've had this year. But what I can say really is that those gains are justified, really. given that the overreaction we had last year was a result of people not being able to dimension the risk, especially in the banking sector, really. But with the CBN coming out to let us know which banks are the good ones, which ones are the ones that have problems, I think it's easier to price risk, really. And I think the sort of gains we've had in the last 2 quarters are really justified, in my view. I think we've gotten to a point now where a lot of stocks and the market is getting closer to its fair value, but I won't say that it's overpriced at this point in time. So I think a lot of factors are positive for the market. And the political environment is largely stable now. Macroeconomic condition is improving. All sector it's rebounding significantly. The currency market is largely stable. And obviously, the issues around the banking sector are being resolved decisively. And, you know, we're seeing progress on a lot of fronts. And liquidity environment, you know, to say the least, is also favorable for the equity market, really. So I think all these factors really makes the sort of gains we have justified. So I see appreciable movement, you know, higher from this level, but I don't expect a significant move from where we are right now, given that a lot of stocks are close to their fair value at this point.